Hello, I'm Craig Martin, the chairman of Dynam Capital, and welcome to our November fund report for Vietnam Holding. Great expectations. It is hard to imagine a country coming out of the chaos of COVID-19 shining. Nevertheless, Vietnam is making headlines once again for containing the virus and achieving exceptional export growth, while much of the Western world endures a worsening second wave and further economic pains, bringing tears to many. Consumption and manufacturing in Vietnam has gained momentum month after month since May. In November, exports increased by close to 9% year on year. And although imports jumped by 13% year on year, the trade surplus of $20 billion is a record. This is even despite setbacks for many manufacturers during the month due to extreme storms and flooding in the country. Key drivers of the strong export growth include mobile phones and computer accessories. But demand has also picked up in all markets over the past month, with textiles and seafood exports to the EU increasing. And this could be early signs of the benefits from the EU-Vietnam Free Trade Agreement put in place in August. Retail sales also made a significant comeback in November, increasing by 8.5%. The fund is up more than 28% fiscal year to date from 1st of July, outperforming the Vietnam All-Share Index, which rose by 24%. The fund has benefited from an increased weighting in banks, a balanced allocation in industrials, and some profit takings in telecoms. Vietinbank, currently the country's third largest bank by assets, with market share of 11.4% in loans and 10.2% in deposits, is new to our portfolio this year and trading at a compelling valuation with a 2021 price to earnings ratio of 11.4 times and a price to book ratio of about 1.3 times. Another contributor is VP Bank, one of the most profitable lenders in Vietnam, with a return on equity average of 24% over the past 5 years. It has a 55% market share of the consumer lending business in Vietnam and a clear focus on the unbanked population, which is estimated at around 65% of adults in the country. It also is one of the first banks in Vietnam to apply Basel II, the Bank for International Settlements International Capital Adequacy Standards. Our overweight position in Hoa Phat Group, the leader in Vietnam's construction, steel, and steel pipe industry, has been a significant contributor to the fund this year. Hoa Phat reported amazing business results, with net revenue and earnings up more than 40% and 56% year on year, respectively, for the first 9 months of 2020. Its products can compete fairly with regional peers, including China, thanks to its fully integrated value chain and effective cost control at its Dung Quat Steel Integrated Complex. It is forecasted to maintain double-digit growth in 2021 to 2022, based on its market position and competitive unit cost. Our overweight position in Phu Jewelry, or P&J, a well-known jewelry producer and retailer in Vietnam, has also paid off this year, and we expect that to continue in 2021. The jewelry market in Vietnam is forecast to grow by double digits, having benefited from the fast-growing middle affluent class and changing consumer preference from traditional savings to modern fashion. And the company has well-respected brands, and its management is aiming for it to be a top regional player. Although the global risks due to COVID-19 still linger, despite the very positive news recently on vaccines, we could not be more positive about Vietnam moving into 2021. The country has stood out for its handling of the crisis and strong macro conditions, which are paving a good foundation for future growth. Vietnam is now the largest member in the MSCI Frontier Market Indices, given Kuwait's recent upgrading. And this could attract around US $400 million or more in net flows over the next 12 months. We also expect a 20% earning per share growth in 2021 for the portfolio. In addition, we are already seeing accelerated public investment, as many projects that were suspended in 2020 due to the pandemic are set to resume next year. We anticipate strong money flows also to come from foreign direct investment and look to the Regional Comprehensive Economic Partnership, or RCEP, to further boost exports to major markets in Asia, including South Korea, Japan, and China. Over the last few days, the UK and Vietnam have also signed the minutes relating to their own free trade agreement that will eliminate over 99% of tariffs on goods between the two nations. There are definitely gains to be had from trade. More information can be found on the fund's website, www.vietnamholding.com. And with that, we'd like to wish you all a very safe Christmas and a prosperous New Year. I look forward to speaking with you again shortly. Thank you.